Good day everyone, this is Patrick from EasyFX Code Trading System, and this is Sunday the 22nd of March 2020, and this is the weekly Ichimoku analysis for the 4th week of March. And as you can see on both the Euro and the cable, has been further continuation to the downside, especially for the Euro, dropping nearly 600 pips, and for the cable, sterling against the US dollar, actually on the scale is almost 1,000 pips. So very drastic moves to the downside, and of course these are all due to fears of the global spread of the COVID-19 virus, as well as all the drastic actions from the respective central banks from all the major countries in slashing rates and setting up additional bond buying to add liquidity into the stock market, which is just crashing in every country, or major corrections, and everyone's in a sell-off panic mode to liquidate their positions, and especially for the major funds to try to protect their profits and balance their portfolios to gain some, move some into cash. So there's a very strong bearish sentiment. Let's take a look at the euro dollar. And after initially climbing up to retest previous support, now it's resistance at the 112 area, and which is at the 38 pip retracement area as well. It started falling and fell through the 110 level, a key psychological support level, and as well as a swing low for the year, and crashed through that at 108 to close just below 107. It did hit a low of 106.38, and that's the that swing low for the year is at the 107, let's call it 80 area, and the extension for the Fibonacci to the 138 level is right close to the 105 round figure, so that's going to be the next key support, and which is likely that it's going to try to target for that. I don't think we need to look at the daily chart because it's also going to be pretty ugly. So you can see that after falling through the Kumo, it tried to pierce through it again but failed and continued to fall further. So this is likely going to continue for another couple of weeks until Europe gets a handle on the spread of the COVID-19. Alright, ECB did not cut rates last week, but they did expand on their bond purchasing, whereas all the US Fed, the Bank of England, and even the RBA has made another cut, second cut for the month. So that's all central banks are making taking drastic actions. Let's take a look at the cable, and continuing from last week, it tried to pull back to the 124 area, but could not reach 125, and then fell through the lows of last year through the 120 key support level, and then punched through the 115 level to almost reach the 162 pip extension level at the 113.80. So it has pulled back slightly and recovered slightly to almost the 138 extension level, but there could be further downside in the weeks to come, and depending on the spread in the UK and the actions. Bank of England did cut an additional 0.15% to bring the interest rates down to 0.1%. The previous week it had already cut from 0.5% down to 0.25, and now it's made another cut of 0.15. So further down below will be the next support at the 200 pip extension, but we'll see whether this current support at 162 pip will hold. If it doesn't, then it could target the 108.75 area. But with this slight recovery, let's take a look at the daily chart. And there was a slight recovery on Thursday and Friday, but it's also consolidating. So it could try to target the 120 level. And if it fails, then it could retest or test the 162 extension and see whether it can break down further. Alright, so all pretty ugly, and do check out my other videos on Euro, Cable and Aussie dollar without the Ichimoku, as well as the spot gold and dollar yen safe haven charts as well. Alright, meanwhile, have a good and safe trading week this coming week,